Hey folks, what a view behind me. I'm at Black Bull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Black Bull Markets, saving you up to $600 a year. Get either the Essential Plus or Premium plans absolutely free. All you need to do is trade from one lot a month at Black Bull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below. Hey, start trading Forex indices and commodities with up to 800k of Blue Guardian's capital risk-free. Just pay a small one-time fee to take the challenge, hit a profit target and get funded. Then keep up to 90% of your profits and enjoy fast weekly payouts. Now for futures traders, Blue Guardian Futures offers up to 450k in funding with 100% profit on your first 15k. With low targets, no activation fees and unlimited resets, it's one of the best deals in the industry. Visit blueguardian.com or blueguardianfutures.com to start trading today and grab their limited time discount code.
What's going on, guys? Hope everybody's having a good day. It's your boy Brinks Trades coming to you live with another week of breakdowns. I hope everybody's having a good week. I see Tony's already in here. Shout out to Tony. Recently joined the mentorship, so hopefully he's getting a lot of value out of that. But yeah, guys. So again, you guys, if you guys don't know me by now, again, my name is Brinks Trades. I am like the resident indices analyst for the Trading Nut podcast. Every week I come on here and I break down charts, and I've been doing this for like almost a year and a half. Almost, I feel like it's been closer to 2 years at this point. I don't know, something like that. It's been a minute. It's been a while since I've done this. I got to go back and look and see when I first started doing this. But I want to say it was like 2023, late 2023 is when I started doing this. So. But I've been doing this for about over a year, and I basically come on here every week and basically break down all the charts. Again, if you guys know anything about my backstory, I started with Forex, then I made the transition to indices about, a little over a year ago at this point. Yeah, so it's been a journey. I still have a lot of love for the currency side of things. I still trade currency futures, right? But everything I do now is more on the future side of things. So the Euro futures, the NQ, the ES, right? But it's still the same indices and same charts, right? So we're just breaking them down. So again, I'll be coming on here to break down, the currency futures and the indice pairs, kind of get an idea of what we should be expecting this week based on price action. And I love this time to really just get people on board to watch and come in with questions. So this is what we're gonna do. I'm gonna go ahead and pull things up. And again, you guys know I love to see where people are calling in from, so don't hesitate to drop where you're calling in from. If you've never done it, if you always watch, I know there's people on here that probably never watch every week and don't comment. I definitely want to create the environment where people, come on and drop comments. So, yeah, so let me go ahead and share my screen. Go ahead and get into it. Let me mute this. And we're going to start with dollar index, right? And again, because we know the dollar index is the kind of like the blueprint to the markets, right? Or it's kind of like the underlying asset that a lot of, currencies or assets are kind of held up against. So we use that to get a better understanding of what the markets are going to be. And if we can understand that, then boom, we might be able to understand where everything is going. So it's a new week. So I want to start in the weekly time frame. I actually do want to revisit the monthly. So past few months, obviously we've been trading higher, and in the last 2 months in particular, we traded back into this daily or monthly fair value gap right there. So that's currently where we're sitting at. It's really early in the week, and the last week we've really had just a crazy retracement, start the month off. So it's going to be interesting to see if we stay like that for the rest of the month or if we keep going down. So that's obviously the monthly. But that's a way higher time frame than we want to kind of consistently look at. So I always reference that at the beginning of the month, like the first week of the month, to see where we're kind of going and then how we close things out. So last week, I said a couple of things. I said I wanted to see potentially the market invert this daily fair value gap. I'm going to jump down here. especially since we're trading here. And the one thing that I called out, though, I said I wanted to potentially see the market go for highs, but I said I won't look for highs, or I won't look for new buy side or highs to kind of get taken out until we fully invert this, right? And if you guys go back and watch last week, I said I wanted to see this market fully invert before I start to look for longs. And if we did, then these were going to be the targets on the long side. And I made the disclaimer that even though we traded to the high end of this fair value gap, there's probably there was still the likelihood that we could just turn around and go lower because we hadn't fully inverted this, right? And so that's the kind of the disclaimer you have to be very careful of when you're trading fair value gaps, and you kind of like looking at this market through a kind of smart money lens, is that you need these things to fully fail before you start to look at the upside. And so basically what happened is, coming into this week, we saw the market really just fail to respect. And once we started closing back under here, and definitely once we took out this low, I mean, this was all fair game for shorts. So thankfully I ended up, not taking any longs last week, but really by the time I got to the terminal, I mean, we were pretty much, this was Monday. So this was just a complete, just rupture of the market. It just fell over. So obviously, and this is why, again, I call it to you guys, if the bias changes, I tell my team in the chat, right? And I let everybody know in the Discord chat. So if you're not part of that, you won't get the updated analysis, because right now we're doing the analysis when the markets are closed. But there's a lot of crazy stuff going on in the world. And you guys all know, with like tariff talks and war talks and, leaders scrapping in the White House and all that stuff like that, right? So there's a lot of stuff going on geopolitically that the market makers and the people that drive price can use to move these things around, right? So we want to stay up to date. So I encourage everybody to get in the Telegram and, get in the Discord. Again, it's a free Discord. You guys can hop on there. And I'll drop a link at the end of this, so stay tuned for that. But if you guys are in there, you guys can see when my analysis does change, and we can, kind of pivot in what we're looking for the week. So because we did pivot, I ended up looking at a couple of pairs. I ended up taking trades on Euro futures and NASDAQ last week, and we ended up kind of hitting the high. So going back to the dollar index, though, what do we want to see this week, right? Well, we are in full bearish mode, right? We're in full bearish mode. So it's easier to wait for breaks in structure. Even if long-term, I think we still might hit up to these like weekly, monthly levels that we called out up here in the long term. We can't even think about that right now, because the market's clearly telling us that it wants to go lower and it wants to chase after sell side. So if that's the case, then we have to really frame out a lower time frame target that we can go to. And there's a couple levels here that we can see. And so right here, we have this huge volume imbalance right there. So this is going to be really something we respected last week. We traded into it and respected it over the past couple weeks. But ideally, want to see what's going on here. This is the low that I would be really kind of focused on as a target at 102.94. So ideally, what we could see to open the week off is the market trade back up into this imbalance here. Maybe even this higher one, and which is from 106.4 to 105.82, and then take things lower, right? Keep going lower. So it really just depends, right? But I think, what I'll be looking for is really how the market treats these two consecutive imbalances, right? And I'm bearish at this point. I can't really go bullish until I get some type of, disrespect of a bearish, imbalance or in liquidity market. So at this point, I have to kind of stick with this bearish bias that we're currently in, and the market wants to continue to go lower until it gives us rejection signs and things that, it's clear of, that we're looking for a reversal based on what I teach my students. So ideally, what I want to see is the market really trade back up into this range and then go lower. And I'll be looking at us trying to really get through here. So if we start the week out higher, trading this in, then I'll be looking for this to really kind of turn around over the next 5, and I'll be looking lower, and then I'll be looking at those lows. So again, if we start to invert these things, then it could change the bias, right? But as of right now, as of market close, this is what I would like to see happen is us trade back into this range, preferably the higher. Preferably us staying in this lower range would be the best option. Is us trading back into here, maybe at this 104.96 level at the max, then going lower. We could trade higher, but just the higher we go, the less likelihood that it's going to come back down. So I would love for us to really have a lot of price action kind of Monday, Tuesday in this range, and then go lower. But again, price can always trade up into there and still go lower. If we invert this, then I'm most likely gonna think that we're gonna probably run for highs and keep going back up. But remember, we are sitting in an overall monthly fair value gap or just below it. So we could be in this range for a while. So just kind of thinking about that. So again, this is kind of the target that I want to see hit, market hit, based on what's currently going on. And yeah, we'll go from there. So let me hop over to the comments. Tony said NFP last week was insane. Definitely different volume there. Yeah, there was a lot. David Mark said, "Oh, I love the comments. Thought this was a trading channel, not an art class. What's up with the 100 boxes, man? I think you got to mark your levels, man. You always got to mark where you think the price is gonna go. And so, I mean, you know, these boxes have got me funded over 1.72 million in futures funding, and you know, have done really wondrous things for my trading career. So, everybody, shout out Mark for the comment though. So I'll stick with my art class if it gives me what I need to see. And I think the main thing here though is that the art class, the art class that I'm drawing on my charts, right, is not necessarily to draw boxes, right? But once you understand the underlying concepts of what the boxes represent and what this means in terms of liquidity, then you start to look at things a little bit differently, right? So we know the market moves from liquidity to liquidity point, and so having these levels marked out is what we want to see happen for our charts. But great question, though. I think that's very, very insightful. Hopefully somebody learned something. So all right, so we're looking at Euro futures, and this one has less boxes, so I think you might like this one a little better. But so we're talking about Euro futures, right? And so originally when we came to the zone, when we came to the zone, there was a couple things that I said I wanted to see, right? And so just even though we were at a level going into last week, if you guys watched last week's analysis, there was a level that was called out on dollar, right? And we obviously want to align our dollar analysis with our Euro futures analysis. And basically what we want to see here is the markets kind of line up, right? So if we're going to be bullish on dollar, we want to be bearish in euro, right? It's just obviously inverse relationship between those currency pairs. And so again, you know, with us kind of shifting focus, right? Initially I said, okay, cool. If we fully invert dollar, right? And if we go back to dollar here, if we fully had inverted dollar, then I would have been looking for buys. I'm sorry, I would have been looking for buys on dollar, and that means I would have been looking for bearishness on euro, right? And so what ended up happening is, you know, Monday we fully came out and inverted this, right? And that lined up with kind of like the bearish respecting of this fair value gap, which again, we had the opportunity to do, again, which is what I called out last week, but you know, it lined up perfectly with this. So just like I had to pivot my bias on the on dollar, we had to pivot our bias in euro. So we ended up trading back into our original idea that we had a couple weeks ago, the market running higher, right? And so the one thing about dealing with price in choppy ranges like this is that you have to be very fluid with your bias, and you have to be able to kind of pivot based on what the market's giving you with new news releases or just, you know, current price action, right? So even last week, the idea that we had for last week is that we wanted to see the market run lower. Thankfully, this pretty much happened on a Monday, so there wasn't really an opportunity to take a trade or a loss on this. But, you know, once we fully inverted this kind of let us know that we were going to really run for these highs, right? So we had daily buy side sitting up here. And then obviously these relative equal highs right there. And I think as we shift to GBP, it's going to be very clear as well. So what are we seeing here, right? Like, what are we seeing? So we ran up, really took out this level here, and then traded into this overall fair value gap right there. So what are we looking to see? So again, the thing about this is that one of the hardest things to do is catch a falling knife, right? Like you don't want to try and catch the high of a trend. If you, and a lot of times the days you're probably blowing your account is that you're trying to catch the high when it's not really ready to reverse, or catch the low when it's not really ready to reverse, right? And so what I want to see here for us to really continue to go higher is I want to see this zone for this fair value gap right here at 1.936 invert. So I'm going to make the note here and say, if we're bullish, we want to see this inverted, right? So again, I want to see the market run up here. Right now, we've ran up here once and haven't traded. So I would like to see this play out, right? I'd like to see the market come back into the zone and then really take things higher. But again, I really won't be looking for buys until we come back into this zone here. So at least at the 1.076 level is where would like to see the market really fall back to really look for buys. So as it sits right now, there's nothing I would do. I wouldn't be trying to sell in this range, but I also wouldn't be trying to buy because again, the overall bias is bullish, right? So we want to see the market continue to go higher until we get some type of, break or some type of, disregard from like an algorithmic standpoint, right? So we haven't gotten that yet. So we got to see the market go higher. So, yeah, so so we pretty much have to wait at this point. So again, you could short this. There might be a short-term shorting opportunity, but until we see something in the longer term, the daily, the 4-hour, there's nothing here that I really want to see happen. Now, go to the 4-hour time frame. If we take out that low, we could run lower, but again, we're still in a daily bullish trend. So it's kind of one of those things where you want to kind of see your time frames line up before you start looking for price to, enter in and take a trade. So ideally, this is what I would like to see. Jump into the weekly time frame too, just to get higher. We are still sitting in that imbalance right there at the 1.843 level. So to be safe, I want to see this kind of fully invert. But yeah, to be safe, I want to see this fully invert, or I want to look to potentially buy in this area down here, right? So we'll see what the market gives us. I'm not in a hurry to take any positions as of yet, but again, as of right now, we want to see this inverted just because we're in a current bullish trend. But it's one of those things where when you hit a target level, like a level that you project, right? We know that, once price hits that liquidity, we kind of have to take a step back and see if it's willing to invert. If this inverts, then I'm really looking for this level here. But as of right now, there's nothing. And even if I go to the weekly time frame, we did kind of break structure and within all of this down here. We were chopping for a few weeks, like since November, pretty much. So this kind of lets me know that we could see some retracement back into this range, but I'm still bullish at this point. Just based on what we're seeing here. So ideally, I want to see the market continue to go higher and this to fully invert. But again, it needs to give us some some clarifying stuff. And we'll talk through news in a second when I get done with all these charts. And we can maybe talk about days where we're going to see the volatility kick in. So let me go back to the comments. Definitely starting to see things better with your explanation and expertise. So shout out to Hassan. He is in the mentorship, and so I'm glad that he's starting to see things a little bit better. But man, yeah, everything starts to draw on liquidity, man. You got to understand, once you understand where the market is headed based on the money, like if you understand where the money's at, you can understand where the market's headed. If you understand where the market's heading, then you can frame out something that will get you there. But I'm glad I met him actually, I think in the summit in this past December, and so he's got a chance to kind of see how I trade for the last few months, and I'm glad everything's making sense. All right, Tony says I'm still in Euro USD longs. Tony, you're brave, man. You are brave because at this point in my career, I'm not swing trading. Um, I I just with all the stuff going on in the world, I'm not swing trading. And to be honest, I'm trading with a lot of futures prop firms now. They don't allow you to swing trade, which is the one thing that I miss about Forex prop firms. I told my chat that this year I'm gonna be doing something on my channel, excuse me, and in my Discord where I'm documenting all of the funded accounts that I'm trying to win or get this year. So I've already passed 4 Top Step accounts um, this year. So four or five Top Step accounts individually, and then Tradeify is another prop firm that I'm working with. So I'm trying to get maxed out with a few futures prop firms, and then circle back to the Forex ones. There's a few Forex ones that I want to give a try out to EA, Top Tier Trader, a couple other ones as well. So I don't know if you guys have experience with those, but I stepped away from the Forex prop firm space just because all that stuff that happened last year, and I started trading more futures because of that. But I mean, I love both markets. I think both of them have their pros and cons. I love the drawdown, the amount of drawdown that you get in the Forex prop firms. I do love the fact that futures and ones are cheaper and they can get you started for less, but with less money comes less drawdown. So and more rules. So there's a lot there to love about both of them. But I'm just trying to get as much funding as possible and have some crazy months this year. So I'm documenting all that stuff on my Discord. So basically just to show transparency because at the end of the day, I feel like there's a lot of transparency missing from this trading space. I feel like there's a lot of people that are faking results or they're just trying to sell you a course or whatnot. And it's one of the reasons that I do this channel, right? So it's because I want to be able to kind of document my process and kind of show you guys that hey, like there's people out here that are really do this for real every single day, and you can make this a full-time career, part-time career, extra income, whatever you want to do, right? It's possible. I'm not saying you will, but it's possible. So that's my income disclosure disclaimer, right? So and I guess I should probably say that everything on here is for educational purposes only, and I'm not quote unquote licensed to give you guys financial advice. So that's my spiel. All right, so let's look at GBP. Let's look at GBP USD. So same thing going on here. The thing that I love about GBP right now is we fully broke structure on a chart. We fully broke structure. And I'm going to clear this off. And I apologize if you guys can hear the barking in the background. So basically, we had a clean break of structure when we took out this level here this past week. I mean, there's been a lot of choppiness going on. But the things that I'll point out is that we took out this high. We also inverted that fair value gap right there, right? So in a downtrend, right, we know that we're going to maintain, bullish order flow and respect bullish liquidity markers. And when we invert those things, it means that the market wants to run higher. So what am I looking at now? Well, there's these relative equal highs here, right? Technically, they're equal. They're technically not equal highs because that second one swept. But that's a good target. So what am I looking at next? I'm looking for the market to really trade up to these. And that is like about 120 pips out. So that's the next level, again, that I want to see the market hit from a weekly perspective. For this particular week, again, same thing, right? I think the market, since we inverted that, that's kind of the next level that we want to see. Again, our goal here is not to catch a falling knife, right? Like we don't want to predict the reversals before the reversals come. And so a lot of times people could talk about like turtle soups or like the idea that the market goes up just to go down, just to raid liquidity to turn around. And that happens a lot, but you need to have like confirmations on those lower time frames that the market's going to reverse, right? And we don't really have those as of yet. We're very, very, very bullish, right? There's nothing here that says that we're going to break structure and go down. So we can't really project to sell at this point, right? Obviously things could change, right? We could invert something, we could go back down, but today, as of right now, nothing here. So this is what I'll be looking at, and I'm going to call out 2 levels. That fair value gap right there at 1.3173 and then 1.3041. So those are the 2 levels, the ones that I'm looking at the market to potentially run into. especially where we're sitting at now. Again, if we break structure in this range, right, obviously anything can change, right? I'm not a magician or like a fortune teller. I'm reading things currently off the information that we have right now. So if things change, y'all need to hop in the chat and see, because I'll update you guys if you're in the Discord. So um again, these are the two levels that I want to see the market run to. Again, it could be over the next couple of days. It could sputter around in this range, especially since we inverted this. But ideally, this is kind of what I'm looking to frame all of my trades around this week, is, us potentially getting to this level. So that is British pound. Tradeify is also definitely one. Yeah. So Tradeify, if you guys, I'm not an affiliate with any of these companies. I don't get paid. I do have an affiliate code, but I barely even post it. So I'm in the same boat as y'all when it comes to these prop firms. I'm not big enough to be getting paid yet from any of these firms. If it happens, then I'll let y'all know, right? But basically, Tradeify is another one that I'm interested in because it has a direct to funded model. So basically, you pay a little bit more for the accounts. Actually, it's probably a decent amount more than the accounts. But you go straight to a funded, and you have targets that you need to hit in your funded account. But once you hit those, then you get paid, right? So, and there's rules that you need to maintain. Like I think you can't have more than like a 20% day of your overall profit can't be made in more than one day, like more than 20% of that. So they have different rules and consistency that you need to follow. But if you want to skip the evaluations and go straight to funded, those are the good ones to do. Again, more rules that they place on you, but really to stop people that are trying to gamble and just try to, hit it all in one day kind of thing. So if you can trade, it doesn't really matter. But if you want to not pay as much, then go the traditional route. So Tony said, I had an account and passed everything and blew it instead of stopping, and that's 5K gone. Yeah, I mean that's the realities of trading, right? And so we talk about a lot of technical analysis stuff, and one of the things that I'm focusing on this year with my traders is the emotional side of trading, right? Because what Tony just mentioned right here, that's emotional, right? That has nothing to do with what's going on in the charts. And probably what happened is, if I had to guess, you passed an account, you were up 5K or however much, right? And then you probably lost a little bit amount of money, and then you started comparing about the money that you had to the money that you currently have, or you had less now, right? You took a loss, right? And you were trying to make that money back, and you trying to make that money back, you lost more money doing it, and so you blew the account. It's usually how it goes. So there's a lot of psychological stuff that goes on behind that, and obviously every person's a little bit different, but everybody kind of generally does the same thing. So, how do we stop that, right? Because we're trying to make ourselves professional traders. We're not trying to be professional gamblers, right? So we're trying to be people that make calculated risk, can adjust, and really, a lot of that time, it has a lot to do with our own personal mental. So how do we manage our head in trades to make sure that we don't do that? And you have to take constant inventory of how you are feeling, right? And this happens to me too. Like I got triggers. Like I got a whole 5 or 6 Google Docs of me talking, outlining my triggers and what is my problems when I trade. So when I know, when those warning signs pop up, then I can like not double down, or I can not close in, because I'm trying to be professional, right? My goal is to trade for a hedge fund. Like I want to be on hedge funds. Like I don't want to, I mean, the prop firms are cool and you can make a lot of money doing that, but I want to be managing 10, 20, $30 million of real money, right? And this is the easiest way for me to get there. So you got to have your mental right. You got to, the same way that Kobe steps into the ring, or Michael Jordan steps in the ring, or Ronaldo or Messi, they step into the ring. You got to have that same mentality, right? And so a lot of that is dissecting the problems with it you have mentally and how you approach that, because you'll do that same thing over and over and over again until you fix it, right? It doesn't matter how many times you get a new account, right? Or like, oh, I know what I need to do now. I know what I need to do, right? Like it's not that. It's you dealing with a psychological problem and correcting that so we can, move forward. And that's the thing about trading. That's the part that nobody ever really talks about. We always break down charts, we always break down fundamentals, but we never really break down our mental, right? And so again, you'll probably see the same problems over and over and over again in your trading, over trading, blowing accounts, and most people blow their accounts in one day, right? It's never a gradual little bit, little bit, little bit, little bit, little bit, little bit, right? It's usually what happens is you take a loss so big in one day or a couple of days or a week that you can't recover, right? And you blow your account or you blow the challenge or whatever. So, um, yeah, and this is, Tony's, this is great. I mean, it's a great combo. I mean, obviously I'm here to break down charts, but I love these conversations too. But my personal thing that I do is I keep a paper account on the side. So it's like and I know like for some reason people don't talk about this, like having paper accounts on the side. So when I'm done with my goals for the week, if I still get the urge to trade, I hit that paper account and I go crazy, right? And there's no risk management, and I'm throwing everything at the wind because I'm having fun with that, and it lets me get the urge out of trading, right? And all the dumb stuff that I would have did in a real account, I'm doing it there because I'm already done for the week, and I have no business placing my actual money on the line once I hit my goals or once profits, targets are hit, right, for the week. So there's a lot there that you want to, maintain and kind of, work on, and the mental aspect is really the most important piece, right? I genuinely think you can be profitable with any strategy if your mental is okay and your risk management. Ahmed said, "Hey, hello, can I get a reply?" You got your reply. All right, so let's go ahead and get to NASDAQ. This is why I know that's why everybody's here. NQ, right? Again, this is US 100. If you guys are international. So what happened here? So I said a couple things. Again, I said potentially coming into the week, the level that I would have been watching was this fair value gap here, right? I said how we react to this fair value gap is going to dictate the week. And so if you go back and watch last week, I said ideally, we ran these lows, and in a best case scenario, we invert this gap and start going higher again, right? But how we play this gap will will dictate how the market runs. And so we gapped up, right, to start the week. If you look here, you can see there's a gap. How do I know there's a gap? Is because we closed right there and we opened right there. So there's a volume imbalance right there, a weekly gap right there. So we traded back up into this. Everything looked good for the first half of the day. And then we not only closed below that gap, the weekly opening gap, but we also closed below this this imbalance here. And so once that happened, we engulfed that. We took out the high and the low. I knew there was probably a pretty good opportunity that we were going to keep running lower. So again, trying to catch a falling knife and trying to catch the low, you're going to lose a lot more money trying to catch the low on any time frame, right? The 1 minute, the 5 minute, the 15 minute, the daily, the 4 hour. If you try to catch the low consistently, you're going to blow a lot of money. So you have to let the market give you signs that the run is over. And so what's happened here is this entire week was bearish, right? And so once I kind of got in line with the overall market, I ended up taking a couple trades. Wow, I passed the top step challenge on Wednesday and took a couple other trades, I think. So again, we're in a bearish run, and the market is, I mean, even though it's wicking, we can't really buy here, right? If we go to the weekly time frame, all we're getting is bearishness. We traded down into this order block here that's happening at the 20,000 level. And so what am I looking at? Well, I can't really long-term say that we're going bullish until we start seeing, markers disrespected, us running liquidity and starting to go higher. So what am I seeing here? I mean, we did run this low, but right now, technically, there's nothing here that I want to see the market go long on. Now, what could change that is if we break structure, potentially take out this fair value gap here, then I might start to shift my idea to a bullish bias. I do like the fact that if we get rid of all these things, you can see here that the market is trying to wick, right? Like we set an initial low here on Tuesday at 20,078, and the market has really failed to close below that for 3 days. And Fridays was really just a huge wick down. So like we traded into this imbalance here, right? Just barely. Oh no, we didn't. We did not actually. I take that back. So we really set this initial low, but I can't really look for buys until I see something long term violated, like this 4-hour low. And we did sweep this, right? So like, yeah, but there's nothing here that was going to cause me to want to go long. So I'll still be looking for shorts until this zone gets violated right there. If we invert this, then I got to change my bias, at least short term to long. So I'm looking at these relative equal highs right here. Boom. Got 20,077.47, right? But as of right now, there's nothing here that's going to want to cause me to go long. Like we have to stick with the overall trend. So maybe we could run up, maybe to start the week off, we get to see something like this. To go lower. If that inverts, which I'm cool with it inverting. I mean, I don't have an issue with it inverting. I don't have an issue with it inverting at all, only because NASDAQ is technically an investment vehicle, right? So like at some point, we know like this is going to make higher highs. We're going to be trading back up here again. It's just the market's not ready to do that, so we can't really trade against that idea until the market's really ready. So that's ideally what I want to see happen here. So that's all I got for NASDAQ. So I don't see any questions. So I'm going to hop on to ES. But ideally, again, I'm still bearish. Maybe until we invert something here. Best case scenario would be us taking out this fair value gap here. Right? But ideally, we're still such in a bearish range that it's not. I mean, I'm not looking to go long in any of that. I'm still looking to short. Now, ES, again, this is going to be the same thing as US500 for you guys that are international. We're still pretty much at the same level, like except on this chart, we did trade down into that volume imbalance. So you can see that we did trade down into that range. That's a little bit different if we put NASDAQ and ES side by side. You can see that, oops, this is YM and Q. If you put NASDAQ side by side, you can see that we didn't get as low on NASDAQ that we did on ES. So in ES, we traded down into this overall imbalance here. Actually, both of them traded down into that secondary fair value gap too, right there, right? But we failed to do so on NQ. Like we stopped just shy of it and ran up. So that could be signs of reversal. It's a long wick, right? We don't, but at this point, I can't really bet against it until the market gives me something that disrespects my idea, which usually means I'll take a loss, right, on a trade. And then usually you'll get in line with the overall trend, right? And that's as simple as it is. You're not going to avoid taking losses in trading, right? So a good trader can come to the table with a bias. If it plays out, awesome. If it doesn't play out, then you know how to get in sync with the overall trend. So that's all that that a good trader will do over time. So again, so that's what I'm looking at on ES. I'm looking at the same thing, really. Let me close this out and bring up just ES. There's the same idea here. I mean, this is huge imbalance here. We already traded into it once. but ideally there's really nothing here except maybe running that old high and going back down and taking things lower. The minute this is inverted, and it will be at some point, right? Because again, the long-term goals on NASDAQ are going to be higher prices, right? We know that because it's an investment vehicle, right? Even if we go into like a recession, right? Eventually the market will eventually go higher again. That's the point of the market. It's an investment vehicle, right? So it could be a recession for a month, a year, whatever, but eventually we make new highs. So what I'm looking at is I want to see the market run up and take out buy side. I'll also be watching consequent encroachment of that wick. Again, same thing on NASDAQ too. I didn't mark all this out on there, but again, consequent encroachment should be potentially respected, which lines up with the low end of that. So we could see the market try and run into that gap again, or run into, it's not the gap. Boom. It's that high right there. So that is consequent encroachment. Again, I want to see either that respected or us take out the high there and then trade back lower, and keep on with this downtrend. There's really nothing here that, again, is going to make me think that this is done yet, other than the fact that we took liquidity. So there's a little bit of divergence on ES, meaning that ES went a little bit deeper than NASDAQ, and NASDAQ stayed a little bit higher. So it could signal a reversal, but we can't just trade off that alone, especially with the condition that we're in, and especially with geopolitically everything that's going on. That's really kind of like hurting the dollar, right? So YM is the last one I'm going to touch on. So again, just like the other ones, I said I wanted to see this potentially inverted before going long. We didn't get the inversion, right? We traded up into this and then completely tanked over. So once we engulfed that, I was like, okay, this is dead. So let's get in line with the overall trend and then continue that bias. So what do we do here? We inverted this first fair value gap there. There's a secondary one right there. So let's see. Right now, so far, we haven't really broken through. This is a balanced price range. So I mean, it could go lower, and I'm not going to say that it's not. This also swept liquidity right there. So it's had a hard time breaking past the low that was set on Tuesday. So every chart really has had a hard time breaking past Tuesday's low. That could be a sign that the market wants to continue to go up and it's ready to reverse. But we got to see something break. And I bet you on the 4 hour, it's going to be the same thing. So visibility, daily, oops. Bam. So again, same idea here. We swept this liquidity right there. We need to invert something. Ideally, I feel really comfortable if we took out this high and look to go higher, and I would maybe trade to that gap or that overall high. But we swept all this liquidity right there. So again, I could see us going higher, but I can't trade against that idea. I needed to see this fully invert. Just like last week, I said I need to see this invert. It needs to fully invert before that can happen. And I'm okay with, that, just waiting for that. So as of right now, I'm sticking with the bearish bias. I want to see potentially the market run up and then go lower, right? But the minute that inverts, again, I want everybody to quote me on this. The minute that inverts, if it does, I'll be looking for longs. But as of right now, I can't project longs. So I don't want to over project is basically what I'm saying. So I want to start trading long setups, and it hasn't really given us the confirmation. So as of right now, I want to see this happen. But the minute that does, if that does, then I'll be 100% okay looking for long opportunities. So that's all I got for you guys. I'm cool. I got a few minutes to stay on the charts. I'm cool with answering questions. I know we've been on here for like an hour, 45 minutes or so. So again, if you guys have any questions, feel free to let me know. And yeah, I got some time. So let me go ahead and drop the link to the Discord. So I'll drop the link to the free chat, right? This does not include any of the paid things that I've been talking about. So if you want access to my actual course and you want access to learn directly from me, then you want to go in this into the paid option, right? And obviously, even with the paid option, it comes with a 7-day free trial, so you really don't have anything to lose. But general connected account security. Pull this up for you guys. But while I'm doing that, feel free to answer any questions. If you guys have other charts you want me to look at, I'll take a look at them too. And we'll go from there. Profit playbook. So this is a link to the profit playbook free. Go ahead and, again, it's free. You know what I mean? Like, it's not it doesn't cost anybody anything. So just staying locked in with my most recent analysis. It's the best way to do so. The secondary thing is, again, if you want actual mentorship and you want actual, all the things that we talked about, the live trading and all of that stuff, just to see how the strategy works. And the goal behind live trading is not to be a copy trading signal service. It's really to understand how the strategy comes to life in real time. And I think for me personally, it's one thing to learn through backups and examples, but I had so many questions and learning from people that just taught me based on videos that stuff didn't come together until I sat there and watched people trade live. And when I watched people trade live, it changed the way that I look at the markets, because I was able to kind of think the way they thought they were thinking, and I saw all their analysis, right? So the reason I trade live for people is not to be some signal service to copy me, right? Because I'm going to win trades, lose trades, right? And I'm not licensed to give trading advice, but I want you to see my logic behind it, so you can take that logic and, when you're trading on your own, you're like, okay, this is how Blake would think this through. And you can kind of go off your own analysis. And I think that's very important, right? So I think it actually knocks down your learning curve like crazy. Can I possibly go over AUD USD? I actually don't have an issue with AUD USD. My issue is with gold. So I don't have an issue going over AUD USD. But let me drop this at the link. So again, if you know that you actually need mentorship and you actually want mentorship, let me do that. So let me drop this in here. And if you guys have any questions, let me know. And then also social media, right? So like you guys can stay locked in with me on Breaks Trades. So again, social media, Instagram, YouTube, all that good stuff. Y'all can find me there. TikTok, all that good stuff. I'm everywhere. So I'm gonna look at. So you said which one, Tony? You said XAA, so gold. Let me look at gold really quickly. XAU USD. Yeah, what the hell is this? Yeah, so I'm not a fan of gold. I've said this a bunch of times, and Tony knows this. That's why he gave that kind of like that discretionary ask, is because I'm not a fan of gold, because the gold only technically moves during moments of like, instability, right? So like when we have elections or years where there's a global crisis like the one that happened in 2020, right? You can go back and see the market fall apart during that time. So we go back to 2020, right? Gold spiked. And why did gold spike? Like you can see here, it's because of, a certain disease, right? YouTube used to censor people for talking about it, so I don't really want to like talk about it. But that, that situation, right? Same thing that happened in 2024. We saw the market really just run up in January 2025 because new presidency, a whole list of uncertainties, right? And so when that election happened, you saw the price of gold drop, but now it's been rising because of all the tariff talks, all that stuff like that. The dollar is having some instability. So anytime you see the dollar having instability, the market's going to run up for gold. So what are we looking at right now? So I called this out a few weeks ago that someone asked me to break this down. I saw that we're having a hard time breaking through here. Once we broke through this high and really took out this low here, started heading lower. The things that I'll note is that small imbalance right there got disrespected and really traded back into. So I would want to see the market really run for highs again, even though we broke structure. So we also on the 4 hour kind of broke stuff, but we're consolidating too. So this is not really one that I have fun playing with. I would lean more towards this going higher again, just because, again, what we know about gold, and we know that it started to invert things that we should be respected, but it also kind of traded back into an old fair value gap. This is basically trading at, the 50% level of this range. So when we talk about the idea of premium and discount, it's trading in that range. So I honestly would just wait for the market to kind of give us this next direction on what liquidity it wants to go after, especially in consolidation. Like I hate trying to predict out of consolidation, but gun to my head, I want to see it go higher. So maybe manipulate lower and then go higher. So if you start seeing the opposite, then maybe I would be wrong on this. But again, this is not something I look at every day. And I really only look at it when people ask me to look at it. But if I had to guess, I would say we'd run back up to the highs. So that's all I got for y'all. Again, if you have any questions at all, feel free. I got like 2 minutes. I can stay on and kind of answer any other questions that you guys got. But yeah, I'll catch y'all. If not, I'll catch y'all next week. Again, join the chats. They're free. They don't cost anybody anything. And they, you know what I'm saying? Like they're good. Like they basically just are free resources. Again, when I started trading 10 years ago, I would have at least, I would have at least 10. I would have given anything, bro. I probably would have gave a few $1,000s to see people break stuff down for you live, or even just have a chat where people could update me on stuff, man. Because when I first started trading, there was no videos on YouTube. This is pre-pandemic, and nobody even really knew what day trading was. There was day traders, obviously, but like the vast majority of resources that y'all have now in 2025, so different than when I first started trading. It was like, why are you gambling your money on the internet? And now it's like, oh, day trading is an actual career. So I'm happy that y'all got the resources, but take advantage of everything, man. So 10-year, if I had a 10-year experience vet, I would I'd take advantage. So that's all I got for y'all. Again, I got like 2 minutes, so drop any other questions in the chat and hold your peace. If not, all right, guys. I don't see anything, so I'll go ahead and end it. And if you guys have any questions, find me in the chat. So appreciate y'all, and have a good rest of the week. And we'll see you next weekend. Peace.
Hey folks, what a view behind me. I'm at Black Bull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Black Bull Markets, saving you up to $600 a year. Get either the Essential Plus or Premium plans absolutely free. All you need to do is trade from one lot a month at Black Bull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below. Hey, start trading Forex indices and commodities with up to 800k of Blue Guardian's capital risk-free. Just pay a small one-time fee to take the challenge, hit a profit target and get funded. Then keep up to 90% of your profits and enjoy fast weekly payouts. Now for futures traders, Blue Guardian Futures offers up to 450k in funding with 100% profit on your first 15k. With low targets, no activation fees and unlimited resets, it's one of the best deals in the industry. Visit blueguardian.com or blueguardianfutures.com to start trading today and grab their limited time discount code.